Thanks, Valencia. Thanks, Dhan, for having me on this show. I joined finance after doing my MBA from Texas A&M. But before Texas A&M, I actually went to IIT Madras, where I learned about mechanical engineering. But I found the field of finance very, very attractive in terms of the dynamism, in terms of the innovation, in terms of different products, the kind of dynamism that is there in the industry. And returned to India after finishing my MBA and have been in finance ever since. I joined a rating company which taught me the basics of finance, and after that I've gone into equities, and I found the journey very exciting and fascinating. The JM Value Fund is a differentiated product. It is aimed at finding out tomorrow's winners today, and what we do in the value fund is that it's not a pure value fund as is defined by low PE or low valuations, etc. What we try to do is to identify companies and businesses which have growth characteristics, have fallen behind because of certain particular industry issues or certain particular company issues which are not structural in nature and which can reverse over a period of time. So, our value fund is actually a growth fund with value characteristics, and we highlight this difference because one can get caught up in the thought that a value fund is a cheap low PE fund, which our fund is not. The value fund is also a differentiated diversified portfolio which has large caps, mid caps, small caps, and it moves across these categories in a dynamic space, across sectors, across these categories. And the value fund in a way is a diversified fund, but is slightly differentiated. So, investors need to be prepared that it can be a little more volatile than a normal diversified fund because of the value characteristic, and buying stocks a little out of flavor than a general diversified fund. The JM investment process follows the geek model. The geek model is growth in earnings with earnings quality. Across the board, our portfolios ensure that we have companies and managements which are of high caliber and high quality. We do not try to compromise on quality to enhance returns, and we monitor the beta of the portfolio to ensure that the volatility of the portfolio is within check, and it's within the norms applied by a risk committee. We have a detailed research report on many of the companies that we invest in, and the research process is thorough to ensure that we get a bottom-up idea. In our view, the market is likely to consolidate over the next 3 to 6 months, primarily because of valuations and earnings growth being muted. As you are aware, corporate India had a phenomenal growth rate last year, and that was on the back of COVID and several structural issues and reasons. But some of that is petering out, and therefore the base is also unattractive, and consequently the growth is a little muted, during which period we believe that the market is not likely to appreciate significantly, and there could be rapid phases of sector rotation or stock volatility, which is why we have ensured that the portfolios are well diversified with no single stock exposure crossing 5 or 6%. I think the sectors that are likely to benefit from the next leg of growth could be from the consumption side, which has been impacted significantly due to the slowdown in rural India, and we could also see the existing sectors continue their growth momentum, such as in IT, pharma, and manufacturing. But we need to be far more selective than what we have been in the past because of this high valuation and growth momentum that we have experienced in recent times. I think the investor gets a diversified portfolio, gets a portfolio which is a little ahead of time, which tries to explore new ideas, new themes, and at a valuation that is slightly below that of the market. That is the benefit this portfolio brings to the investor and helps in diversifying the investor's pool of assets. I think that is the benefit of the JM Value Fund. As mentioned about the key risks about the portfolio, because of being a little differentiated, there could be periods of higher volatility followed by higher returns, and that is something that the investor needs to balance out in his portfolio properly. That's one. The second thing which we need to bear in mind is that there will be a differentiated portfolio. It may not hold the simple classic stocks that you expect in a general diversified portfolio. It may be market cap agnostic, it will be sector agnostic, and it will be a bottom up process that this portfolio follows, which will be a fairly differentiated strategy that the investor gets. As has been discussed in various forums, JM Mutual Fund follows the geek philosophy and follows a very rigorous process of risk and performance appraisal on a monthly basis, which helps the portfolio ensure that it gets rid of laggards and moves on to newer ideas and newer themes. And this continuous monitoring process has helped the performance this far and is expected to continue to help monitoring the performance from time to time. The geek philosophy ensures that we are in the growth oriented sectors, which is key to portfolio appreciation, as also maintaining the quality of the portfolio through the earnings quality metrics that we monitor, such as return on equity, free cash flows, and growth. So, we are fairly confident that this portfolio is likely to be one of the better performing portfolios in its category because of the actions that we have taken.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.